Hi, Paul Gerard, Price Accounting Services, back for another video in our business and entity channel. Today we're going to be talking about FBT and cars. Okay, many small businesses think of cars and say private use and deductible benefits. However, it is often far from that simple. We wanted to give you some knowledge and understanding so that you can make appropriate choices or seek the appropriate advice to make a better choice. So a car is defined in tax law and includes things like an SUV, etc. A car doesn't necessarily have to fulfill the role that you think it must to be a car. We hear all sorts of misconceptions that you can put logos and signage on it and all of a sudden it's exempt. That is not the case. So FBT affects all employees, including family companies. So a self-employed business which operates cars may have an FBT issue, and it can't just be simply disregarded. In place, what most competent tax advisors is that you understand how to use the FBT system appropriately so that you manage the FBT problem and perhaps even completely eliminate the risk of paying FBT. Now, once you understand what the potential FBT liability may be, then it's necessary to calculate the actual amount that could arise. Now, there are a couple of methods for calculating, for example, car benefits. You can use a statutory method, or you can use a logbook-based method, an operating cost method. And either method may produce different outcomes, and it might have benefits for one method over the other. Or you may calculate both and then choose that which produces the least cost. Okay. Once the FBT impact is known and understood, it might be a simple strategy to address how a dividend could be paid by the company to the owner of the company, which is not physically paid in cash, but which covers the expected contribution to offset the FBT. So this can avoid having to pay FBT. And it then limits the amount of extra income to be both franked so that there might only be a top-up bit of tax to pay, but also it also minimises cash flows in respect of the business. So that is a strategy we commonly suggest and recommend, and it can even include things like GST claims on a part of the cost of the vehicle and so forth. In the rarest situations, we might even advise on very high-end expensive vehicles and why these might be very poor acquisitions by a business. I gave advice to a client regarding a performance sports car, more than $400,000 of value, and with the FBT calculations in draft that we provided, they quickly realised that might be better acquired as a private car. So we regularly advise on cars and FBT and business deductions and all those things concerning vehicles, including business fleets, which may even be exempt from FBT or private use adjustments, etc., where certain conditions are met. So we're happy to discuss and assist your strategies in these areas and to make sure you get a tax efficient use of your business operations. So if you've got any questions or have an interest in any of those services, do give us a call. Happy to assist and guide you on a case-by-case basis. But otherwise, until you watch another one of our videos, perhaps check out our other channels and also further videos in this channel, and we'll see you another time. Bye.